me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. Let's take a look at where the markets are right now, and you're seeing gains of about 1/3% for the benchmark Nifty 50, and the broader markets are languishing just a tad bit. In fact, if anything, we're at close to the high point of the day for the Nifty 50. You see that bit of gain in the last 10 to 15 minutes of trade itself. And the mid-cap index currently with gains of just about 0.2% or thereabouts, and similar gains for the small-cap index as well. All told, it is a little bit of caution that is in evidence in risk assets, not just here in India, but across the world, where you're seeing a patchwork of performance in both the US markets, which were mixed, as well as the Asia-Pacific region. But let's take a look at some of the key indices to watch today. The auto index is looking strong. It's up as much as 1% or thereabouts in trade today, and one of the top performers. But the metal index is also doing reasonably well, up about 1.2% or thereabouts. Energy is in focus because crude oil prices have declined quite sharply in the last couple of sessions. As of this morning, you had the Brent crude, which was trading at $83.5 to the barrel, and in fact it has lost quite a bit of ground over the last couple of days. You have oil and gas, which is up about 0.8%. Among the losers, you have realty as a pack that's not doing too well in trade today. It's down about 1.5% or thereabouts, and the Nifty Bank, which saw quite a precipitous fall at the end of the session on Wednesday, is continuing to lose ground, but it is off the low point of the day, still down about 0.3%. Let's focus on auto then. And you've seen quite a few updates over the course of yesterday and today on the auto sales numbers for the month of April. And there's a pretty clear picture that is emerging in terms of which segments are doing better than the others. To tell you more about the update, we've got Puneet joining in. Puneet, what can you tell us?
Hi Alex. So as you rightly said, there is a clear theme, which would be that rural has done slightly better this time compared to the whole of previous year, where the trend of rural has been on the downward. So when you look at companies across segments of two-wheelers and commercial vehicles, they have delivered strong performance, with Hero MotoCorp in the two-wheeler space up 35%. The sales is up 35% on a year-on-year basis compared to the previous year, while TVS Motors has also performed well, growing at roughly 25%. Both these counters have blown past analyst expectations, as we can see on the screen, where the sales were guided for by the analysts on a much lower basis. Now for Hero specifically, the 125cc segment has done really well with the Extreme, while for TVS Motors, they have products range across the 100 to 125cc, as well as the EV scooter has done well, despite the lower subsidies given by the government in the new EMPS scheme. For Bajaj Auto as well, there's a 17% growth, while Eicher has grown roughly 12% compared to the previous year. Commercial vehicles, though, are showing the real growth, up 31% for Tata Motors, the market leader here. Two segments specifically, the passenger carrier as well as the intercity transport vehicles, the ILCV is what they call it. Both these segments have grown more than 100%. What this would indicate is that the people who generally have the passenger carriers who would generally transport people from point A to point B, this segment has grown 100%, showing that this segment is coming back. FY24 was very weak for these particular segments and is the key for both these companies. While VCV, and here is a divergent trend, the only CV maker showing a degrowth of more than 18%, while their MHCV sales have fallen roughly 24%. A little more commentary in the earnings call will be key. While finally the passenger vehicles, not so much growth, and for Maruti specifically, it does well when rural does well. But here in this is a key update that they've launched the new Swift, which will be going, the bookings for which have started from the 1st of May, and they have pulled back some of the older stock in the compact mid segment where the Swift operates. So that's why lower sales for it. Mahindra & Mahindra has continued a strong SUV focus. So do note that they operate the Bolero SUV in the rural space as well. So overall, just to sum it up, the rural theme has worked well for all companies. Going forward, we'll see more commentary by the managements in the earnings conference call. But right now, stocks doing really well for the rural players. Back to you.
All right, thanks. Thank you, Puneet, for that. Good morning, viewers. Now, on that note, let me introduce you to one of the guests. We have Osho Krishnan of Angel One joining in. We'll also shortly be joined by Sameer Dalal of Natwalal and Sons. But circling back to Nifty Bank, we'll definitely talk about autos in just a minute. Osho, I want to focus specifically on the Nifty Bank index today, as Alex has already spoken about what happened in the previous session. And today as well, it's a bit of a chop and churn in the index itself. A lot of volatility. You look at the high points, you look at the low points of the day. How are you viewing this on the charts, Nifty Bank?
Very good morning to both of you and all the viewers. Firstly, thank you for having me at your show. Now, coming back to the query on Bank Nifty, yes, Bank Nifty have seen a very strong traction in the last two trading sessions. But as we can see that the last session was the expiry for Bank Nifty, so it has seen strong long unwinding, but overall the structure remains very buoyant in Bank Nifty. So I'm expecting that on the downside, 49,000 to 48,900 on the spot level should be acting as a very strong support zone, while on the higher end, the resistance is very nearby. Approximately the close of last session for Bank Nifty, which was approximately 49,430 odd levels. That is a very crucial level to watch for. The time it surpasses that on a decisive manner and sustains above there, then we can witness a strong rally in Bank Nifty. On the higher end, I am expecting approximately 49,700, 800 to be seen as immediate target, followed by the mark of 50,000.
We're still waiting for Sameer. All right, Sameer has just joined in. Sameer, thanks so much for taking the time. We were talking about auto sales and the ones that have come through. A quick view on how you view the numbers and which stock do you like?
Hi, sorry for the late arrival, but yeah, you were asking about the auto numbers. So, actually haven't been able to go through a lot of them. What I do know about is the Bajaj auto numbers, which came in quite decent. But the rest of them I still haven't looked at, so I don't have an answer to you at this point.
Fair enough. But given what you know so far, what stock, according to you, from the OEM pack do you like the most?
So actually, if you ask me from the OEM pack, a lot of them have already run up quite a bit, and where valuations have, moved up, and I think a lot of the stocks are fairly valued at that. So the opportunity actually, if you ask me, lies in companies that are outside the existing OEMs in the sense of the traditional ICE engines, but someone who's focusing more on the electric vehicle and the opportunity for growth. So one of the companies that we do track in that space and we like is a company called Greaves Cotton. We mentioned this on your channel before as well. And I'd like to say that we have a holding and we've recommended it to all our clients as a disclaimer. And a lot of our clients hold it. So they're making the electric two-wheelers and three-wheelers. They're increasing their product profile. Where they've taken a bit of a hit in the recent past was that, you get these certain benefits which the government said they were not allowed to take because of certain amount of parts that were being imported. Now, they've repaid all of the benefits that they received in the past, and to the point have also reapplied for this FAME license. And once that comes through, we get a feeling that they will become more competitive when it sells. Not said that they're not already. They're already selling bikes without being able to get those FAME benefits and being competitive in the market. So that is one of the stocks that we do like. But like I said, in the traditional OEM spaces, I think the one stock that maybe valuation comfort to some extent is there is Hero MotoCorp. That has run up. Bajaj Auto post its buyback has moved up quite significantly. I think Tata Motors, Maruti, all have moved up. Maruti, of course, has the fact that numbers came in quite good so far. So, but like I said, I wouldn't be looking to invest in them at this point of time. Maybe on corrections, yes, but Greaves Cotton and Hero are who I would.
All right. Got it. Let's quickly jump into the queries now. Now, let me remind you first that you can write to us on any of our social media channels or on the WhatsApp number that's on your screen. You can also write to us from the YouTube live chat and we'll take your queries from there. Let's start off with the queries. The first one is on Divi's Labs. This one's from Rajesh Maheshwari. He's writing in from Singapore. He says he bought the shares at a price of 4,465 rupees, slightly elevated prices there. Now, his question is, does it make sense? And the stock seems to be, isn't doing too well in the last couple of months as well. Osho, I'm going to come to you in this on this one. Does it make sense to hold on to the stock? Do you see upside?
See, overall in Divi's Lab, yes, as you have mentioned, in the broader perspective, the counter might not have given that much of return, but in the short-term perspective, the counter have seen a very strong traction and it has research from the 200-day SMA. So that is a very positive development on the technical front. But again, on the higher levels, approximately 4,000 and 4,050 odd levels is a very crucial resistance. Until it surpasses this level on a sustainable basis, there can be some kind of consolidation or some kind of profit booking that can happen in this counter for the short term. But the time it surpasses the zone of 4,050 on a closing basis, then from here onwards, one can expect a decent rally of approximately 300 to 400 odd points.
Okay, fair point. We've got the next question that is from Neeraj, and he's asking about Tarson's products. Samir, do you have coverage on this one? He's looking for a long-term view on this, and I suppose he's asking whether he should get in at this level.
You said Tarson's, right?
That's right.
No, we don't have coverage on that one.
Okay,
so
then do you have a view on whether AB Capital is better than Aditya Birla Sun Life AMC?
So they're very different businesses, right? So if you own AB Capital, you also own Aditya Birla Sun Life AMC. So AB Capital, first of all, is a business that is into lending. They have lending operations, which is the key focus. They're growing their loan book quite well. After the new management has come in, we've seen a massive re-rating. You've seen NPAs coming lower. You've seen the provisions coming off. You've seen profitability going up. So on all factors, it's good. Then you also get the insurance business along with the health insurance, which is of course right now still in the early growth stages and reporting some losses, and the life insurance business, which is quite profitable. So if you were to ask me which one of the two I would buy, I would prefer AB Capital, because at the end of the day, I believe the lending business is something that will continue to grow. The life insurance businesses will grow, and I get to play the Sun Life business. I mean the AMC business separately. Through the AB Capital kind of investment. So I would recommend AB Capital over AB Sun Life at this point of time.
All right. The next counter we're talking about is SBI Life. This one's from Mr. GC Prakash. He's also writing to us on YouTube. They say they bought the counter at a price of 880 rupees. So a considerable profit there, Roshu, and this is from a shorter term perspective, from 1 to 3 months. Now, the stock hasn't done too much in the last 1 year itself. Would you suggest holding on for maybe 3 more months?
See, overall, this counter has seen a very good traction in last 5 to 6 trading months. Overall, it is in the cycle of higher highs, higher lows, and recently is trying to get a settlement or get a support kind of a consolidation near the 200-day SMA, which historically has seen a very strong support zone for this counter. So from here onwards, there can be a decent and gradual up move that can be seen in SBI Life. On the higher front, I am expecting again, once it surpasses the zone of 1500, 1520 odd levels, then this counter has the ability to again re-enter into the uncharted territory. So even for short-term perspective, one should definitely hold this counter. If advisable to keep a stop loss near about 1380 on the spot price for a higher target of nearly 1520 for very short term, and after that we can even witness a very strong upsurge in this counter.
All right. That's the view on SBI Life. The next one's on IRFC, which Arun Kumar from Ghaziabad in UP has bought at levels of 71.6. He's asking whether to book profits at this juncture. Osho, on the charts, how does it look? It's currently trading way above the buy price. In fact, it's been a doubler for this particular viewer. Should it be? Should money be taken off the table right now?
See, IRFC is a counter that if you don't require the money invested in IRFC, then stay invested in this counter. Overall, this counter have seen a very strong traction, as you have mentioned. And after that traction, the counter is into a time-wise correction phase, which should be considered healthy from a longer-term duration. So from here onwards, I am having a very bullish view and expecting that in a short run, it should again retest the zone of 180, 185. And on the lower end, 135 to 40 is a very strong support zone for IRFC. So if money is not required, I will advise to stay invested in this counter. All
right. Next counter we're talking about is Tata Steel. This one's from Anush Patel. This one's from Sohail, and they bought the shares at a price of 1,000 shares at a price of 162 rupees. So slightly below where it's currently trading at. From a longer term perspective, Samir, would you suggest holding on to Tata Steel?
So given the fact that metal counters are doing well right now and everyone's expecting metal prices to remain firm, because China seems to be seeing some moderate sign of recovery, They're talking of the fact that the Chinese government will come and give some support for the real estate sector, which has been struggling there. And steel actually has a big consumption there as well. Apart from that, the auto ancillaries and all of that space is doing quite well. So the demand for the metals will remain robust. As long as the cycle continues to remain up, I think one can stay invested. However, one thing with metal counters is, there's a massive amount of volatility and there can be very fast changes in how the prices come down. So if one wants to stay invested and enjoy the bull run in the metal counter right now, stay invested, but keep a stop loss. And keep the stop loss rising as the stock keeps rising because of these metal prices. But keep it 5% below what the going price is at that point. And if you see a 5% fall, take your money and get out of the stock, given the fact that the volatility can be quite high.
Absolutely. That's the case, I guess, with metal. When the underlying, you don't know where it's going, right? Samir, thanks so much for that view. We have to take a very quick break. On the other side, we'll take more of your questions, so do stay tuned.
Welcome back. You're tuned into Ask Profit. Let's dive into the queries again. This one's from Anush Patel. Talking about two counters here, and Osho, I'm going to come to you on this one. The two counters are NCC and NHPC. They want to know if this is the right time to enter these two stocks, and if you can give us the levels that one should enter at.
See, firstly on NHPC, I have a very strong view on NHPC, and I'm expecting that in a very short time, it will be entering into a three-digit figure. So on the higher end, I am expecting 102 and 105 to be seen as the immediate target for NHPC. Reason behind it, it is hovering at a very strong technical setup and recently has seen a very strong breakout around the zone of 95 odd levels. So from here onwards, I am expecting a very decent move. Approximately 105 should be the immediate target for short-term frame. But overall, the structure looks very prominent, and I'm expecting even for a medium-term duration, it has the ability to move towards the zone of 112 to 115. Now coming to NCC again is looking very positive, currently entered into a consolidation phase, but historically the 50-day and 100-day EMA has proved to be providing a very strong support zone, and it is hovering around the 50-day EMA. So there can be some kind of lackluster move or consolidation that can be seen on short-term frame, but overall the chart structure is very strong, and I expect the time it breaches the zone of nearly 250 odd levels, then from here onwards again a strong traction can be seen for higher targets of nearly 275.
Absolutely. It's another doubler over the last 12 months. I think we're going to have to do a separate show on all of these doublers. Let's talk about IOCL though. We've got a viewer who has got a tremendous quantity. Asif, he's holding 1 lakh, is that right? 1,50,000 shares of IOCL that he's bought at levels of 80, and wow, he's making quite a bit here. The question, Samir, therefore is to you. He's got a long-term view on this particular counter, and he's been holding evidently for some time, making quite a bit of money. Should he hold on?
Honestly, if you ask me, I would take some money off the table, not from the point of view that whether I expect the stock to go up or down, but it doesn't hurt to book some amount of profit. Now, coming to IOCL specifically, the company has done really well because the refining margins for the company had moved up, the retailing margins had moved up, and all of this cannot sustain indefinitely. Yes, the last quarter results, if you see IOCL, the results came in a little subpar where the refining margins did come down, and we got these high refining margins because we were getting cheaper crude from Russia. Now, we may not continue to keep getting that price, and with that, maybe refining margins could take a bit of a knock. Secondly, we are in the election period, so of course, these price increases in crude that have recently happened, we were not able to pass on. Going forward, they will definitely increase some amount of retailing prices, but I feel a lot of the positivity for the stock has been captured in. So book some amount of profits if you want to continue to ride till the Russia-Ukraine war goes on, until you have these embargoes on the Russian crude in the global market. These counters will do well, but once these embargoes and if the war and the embargoes go, I think what you will see is that your margins, profitability and all will start coming off, and that time the stock will fall quite quickly. So take some profit now, maybe 20%, and keep the rest if you want for another 6 months, and keep viewing the situation as it is.
All right. Now, the next counter we're talking about is Castrol. This one's from Satya, and this is also from YouTube. Now, they say they want to ask that if this is the right time to buy a stock like Castrol. Now, we see the fourth quarter numbers for this one. Nothing, I mean, it hasn't done too much in the fourth quarter. Even if you look at the stock, Samir, the stock has been pretty much on a downturn in the last month or so. Would you suggest buying at these levels? Is it a right time to buy?
So actually, if you look at a slightly longer term period, the stock has given exceptional returns. It's moved up from 120 odd to 200 and 220. Yes, and last month has been a bit subdued. The reason why Castrol actually, if you look at valuations, is trading at quite attractive levels from a point of view is that expectation is as the oil moves to electric vehicles, the demand for the oil, which is their core business, will start coming off. And if that starts happening, the main profitability and the main business gets affected. Plus, this space is already very competitive with HPBP, all these companies making their own oil. You have Gulf Oil, it's very competitive. But in this competitive nature, if you would look to see, they've actually done quite well. They've actually grown their top line, and they've talked about the fact that they've been able to capture a little bit more market share, and they're increasing their rural penetration and all of those points. So it's not so negative. Yes, the stock in the recent past, like you said, has underperformed, very recent past. But the way I look at it is they're diversifying into various new businesses. One of them is into, maintenance of cars. They're doing tie-ups with various players, and where they're going to have set up centers for repairing and maintenance of cars. Apart from that, they're going to get into setting up charging stations at their various store levels. And they are also diversifying to make a liquid which goes into the batteries for electric vehicles. So all of these businesses will also start seeing an uptick over time. Given the fact that it's a debt-free, cash-rich company, I think the long term looks good. Is it the right time to buy right away? Probably not, given the fact that it ran up from 120 to 200. Maybe if it comes down to the 180 levels, it would make a good investment from a 3 to 5 year point of view. And of course, we have to keep reviewing it, but we do like Castrol from a longer term point of view.
Gentlemen, do keep your questions, do keep your answers a little bit shorter. We're going to try and fit as many as possible over the next 3 minutes. The next one's a Paytm question. It's from Nehal. She's bought at levels of 791. She's got a short-term view on the stock. Osha, should she hold on?
See, for Paytm again, I'm not very much bullish because looking at the overall trend, it has after having a very strong fall, the counter has entered into a consolidation phase. So until it surpasses the zone of 440, 450 odd levels, I won't be having a very bullish approach in this counter.
The next counter we're talking about is IDFC First Bank. This one's from Sujay from Kolkata. They say they bought the shares at a price of 85 rupees. It's trading slightly below that price. Samir, from a longer term, and by a longer term I mean 1 year perspective, I think that's the holding period that they have in mind. Would you suggest holding on to it?
Absolutely. So my 1 year target for the stock is 120. The bank's growing quite well. They've been aggressive on provisions, which is why what you've seen after the results, the stock saw a bit of a dip. But if you look at it, the gross NPS, net NPS are down. So I would definitely hold on from a 1 year and a longer term.
That was Sujay's question, right? All right, the next question is on GMR Infrastructure. It's from Swastik. He's asking whether this is a good stock to enter at the current price, which is at 85. Osho, what's the view on the charts?
See, overall, this counter looks very positive. Recently, it has started gaining traction also. But at current levels, it's better to have a accumulation in a staggered manner because it is already at a very stronger price zone at a higher price. So I expect that from here onwards, undoubtedly, I'm expecting a 3-digit target in this counter. But on the lower end, one should keep a room near about to accumulate more near about 75 to 70 odd levels.
All right. The next counter we're talking about is Irida, and this one's from Hanu Mantharao from Hyderabad. They say they bought the shares at a price of 103 rupees. It's trading around 181 rupees. Would you suggest holding on to this counter, Samir, from a longer term perspective?
No, I don't. I think one should take money off the table. As good as the run it's had, I think valuations are a bit stretched. There are other NBFCs trading at better valuations. Take your profit, get out, and find something else to invest in.
In Restaurant Brands Asia, would you hold on to this if you bought at levels of 95? I think, if I'm not mistaken, Samir.
Yes, I would hold on to it. The company's expanding its footprint with Burger King. I think the kind of penetration growth that can happen over the next many years has been not exceptional. The overhang is that Everstone, the private equity that owns it, is looking to sell. And once that exit is completed and new promoter comes in, I think the stock will start seeing an uptick.
That last question was from Subodh Malhotra. We managed to fit it in. Samir, as well as Osho, thanks so much for taking the time. Viewers, we're completely out of time on this particular edition of Ask Profit. It's been a pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.
welcome. We have with us a very special guest, a company that's been quarter on quarter performing well and, of course, delivering stable earnings is Castrol India. This time around, while the top line looks good, there has been a little bit of contraction on margins. But we have with us Mr. Bakshi, who joins in to talk to us about the quarter gone by and giving us a sense of what lies ahead in FY25. Mr. Bakshi, thank you very much for joining us today on the show. It's great to have you on NDTV Profit. Mr. Bakshi, give us some color about the quarter that's gone by. Your net profit is up nearly 7%. What are the factors that led to that? Apparently, and also the sense that we get is revenue is muted and margins have contracted a little bit. So wrap that up for us, and also tell us what lies ahead for FY25 in terms of a guidance.